Welcome. In this video, where does Zbcn coin price want to go? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When looking at the chart from a broader perspective, a significant resistance line emerges that should not be overlooked. This level has historically acted as a key area where price attempted multiple upward moves but was consistently met with selling pressure, leading to pullbacks. Each time the price approached this zone, reactions driven by profit-taking or new sell orders occurred, making this area a technically strong resistance. What stands out here, however, is the repeated tests of this level. In technical analysis, there's a well-known principle. The more a resistance level is tested, the higher the likelihood it will eventually break. So the price repeatedly approaching this level could be a strong indication that selling strength is weakening while buyers are gaining momentum. This is a technically positive development. As of now, the price once again nearing this resistance line suggests that market participants are closely watching this area and that buying expectations remain alive. If the price manages to break above this level with strong volume and conviction, it could create a technical void above, paving the way for higher levels to be tested. In conclusion, while this level has acted as strong resistance in the past, it could become a key turning point if a breakout occurs. The fact that the price is moving toward this area again shows that the market still has upward intentions. This resistance is no longer just a barrier. It's a threshold waiting to be crossed. And if the price breaks through, the potential for a new bullish momentum becomes a strong possibility. But of course, we can't rely solely on resistance for analysis, so let's take a look at the other metrics as well. Stay tuned. Among the most notable structures on the chart right now is a clearly developing inverse head and shoulders, H and S pattern. This formation is considered a strong reversal signal in technical analysis and often indicates that a prolonged downtrend may be coming to an end, suggesting the market is preparing for an upward movement. In other words, the current price action may not just be a typical recovery, but rather the beginning of a structural trend reversal. Looking at the technical anatomy of this pattern, we first observe the formation of the left shoulder. This area was created after a rebound following a decline, which then pulled back again. The head followed, forming the deepest low of the pattern. While selling pressure intensified at this point, an important detail stands out. The reaction after the head was stronger than that after the left shoulder. This can be interpreted as a sign that buyers are beginning to gain strength. We're now at the most closely watched stage, the right shoulder. The price is currently attempting to form this final part of the pattern. This stage is critical because it represents the shift in investor psychology. Sellers are no longer as strong as before, and the market is looking for an opportunity to move upward. If the price successfully completes this shoulder and then breaks above the horizontal resistance known as the neckline, the pattern is technically considered complete. Such a breakout is not only a technical event, it also represents the crossing of a psychological threshold. Since patterns like this are widely followed by market participants, a breakout above the neckline can trigger a strong wave of buying interest. A rise in volume strengthens and validates such breakouts. If a breakout occurs with volume, the expected upward move is typically equal to the depth of the head, which would present a meaningful upside potential compared to current levels. Furthermore, when looking at the price range where this pattern is forming, it aligns with previous areas that acted as strong support/resistance. This adds to the technical validity and reliability of the formation. If the pattern completes and the price initiates an upward breakout, the move may not be just a short-term spike. These types of reversal patterns often signal a trend change, meaning the start of a potentially longer-lasting uptrend, not just a bounce. Therefore, it's likely that many technical analysts and trading algorithms are closely watching this formation. In conclusion, the developing inverse H and S pattern on the chart is giving off highly positive signals, both technically and psychologically. As of now, the price is in the process of forming the right shoulder, and if this phase completes smoothly, a breakout through the neckline could trigger a strong upward move. Such a breakout could present profitable opportunities for investors in both the short and medium term. With that in mind, the completion of the pattern should be closely monitored, and attention should also be paid to how market psychology responds to a potential breakout. The technical setup supports such a breakout, and if accompanied by volume and momentum, it's highly likely that the price will gain strong upward traction following this structure. One of the strongest technical signals currently visible on the chart is that the price is trading above the 200-day exponential moving average, EMA. This average is not just a line used in technical analysis, it is also one of the most fundamental reference points for identifying the long-term trend in the market. Staying above this level is a very strong technical indication that the overall trend remains bullish. In technical analysis, the 200 EMA acts like a dividing line. When the price is below it, bearish pressure dominates, and when it's above, bullish momentum tends to take over. At the moment, the price is holding above this critical level and showing a relatively stable structure. This suggests growing confidence in the market and that buyers continue to maintain control. Price action above the 200 EMA is generally viewed as highly positive, especially by medium and long-term investors. This is because the 200 EMA is often closely watched by big players, such as institutional investors, who shape their trading decisions around it. As long as the price remains above this level, the bullish scenario remains valid. Additionally, moving averages like this often evolve into dynamic support levels over time. This means that with each pullback, the price may test the 200 EMA and bounce from it, signaling that the uptrend is continuing in a healthy manner. A strong trend typically progresses with periodic corrections, and when these corrections find support at the 200 EMA, it shows the trend is gaining depth. Looking at the current price structure, we can see that after breaking above the 200 EMA, there is now an effort to hold above it. If this hold is successful, it is highly likely that the price will make new upward moves. Especially if levels that previously acted as resistance now serve as support, it confirms the bullish trend. This transformation is critical in technical analysis. A level that once acted as a ceiling becomes a solid floor, as long as the price stays above it. Furthermore, maintaining price action above the 200 EMA creates a positive psychological environment for investors. Many traders view prices above this moving average as an indication that downside risk is limited and that upward opportunities are more likely. This psychological support becomes a strong foundation for prices to advance to higher levels over time. It is also possible for the price to continue progressing step by step toward higher resistance levels while holding this level. If the rise is supported by volume, the price could transition into a higher structure, laying the foundation for a long-term uptrend. These kinds of moves offer not just short-term opportunities, but also reassuring and promising signals for medium and long-term investors. In conclusion, the price action above the 200 EMA is a highly strong technical signal. As long as the price stays above this level, the likelihood of the uptrend continuing in a healthy manner remains high. This creates a technical setup that supports investor confidence and reinforces positive expectations. If this setup is supported by volume, it is highly likely that the price will aim for higher levels and test new highs in the coming days. Following the 200 EMA is essential for identifying long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.